Hello guys, in front of you there is one question which is from cash flow statement. It is having very new points and complicated points which we are going to discuss in today's video. So welcome back to my channel Accountancy. Let's see what question is about and what question is asking. First of all, here you are asked to not to prepare the full-fledged cash flow statement, rather you are asked to calculate net profit before tax and extraordinary items. You are asked to calculate operating profit before working capital changes, investment activities cash flow, financing activity cash flow, and closing cash and cash equivalents. Right? So let's start with the question. What's there in the question? So first of all, what the question is about, the question says over here that read the following hypothetical text and answer the given questions on the basis of the same. Ashna, an alumnus of CBSE school, initiated her startup as SmartPay in 2015. SmartPay is a serious service platform that processes the payment via UPI and POS, provides credit on the loans to the clients, and during the year 2021-22, SmartPay issued bonus shares in the ratio of the 5:1 by capitalizing the reserves. So first important point for us is that they have issued bonus shares by capitalizing their reserve. There is one important aspect in your book also provided regarding the security premium. Let's see firstly this point from the given situation. In the given case, you are provided with the equity share capital, right, which was initially of 10 lakh and now it is of 12 lakh, and security premium account which was initially of 5 lakh and now it is of 3 lakh. At the opening of the year it was 5 lakh and now it is of 3 lakh. If you say see over here, the change in security premium is with rupees 2 lakh which has fallen down, right? Your SP security premium account here has given a deduction of rupees 2 lakh. It is with the less. Your security premium account has reduced with rupees 2 lakh, whereas your equity share capital account has shown a plus of rupees 2 lakh. Initially it was 10, now it is 12, so it has increased with rupees 2 lakh. As per the question, we are supposed to issue bonus shares by capitalizing reserve. Here, which kind of reserve we are finding a change, that is security premium. As per Companies Act also, security premium can be used for the issue of the fully paid equity share capital. So let's see, if the opening share capital was of rupees 10 lakh and we have to issue bonus in which ratio 5:1, means the shareholder who is holding 5 shares will be given 1 as a bonus. So how to calculate it? Let's for the calculation of the bonus shares, equity shares who are holding 5 will be given 1 bonus share, right? If at the opening balance of equity shares was of rupees 10 lakh, then how much bonus shares were issued, right? So to calculate that, 10 lakh into 1 divided by 5 by the cross multiplication method, we got how many bonus shares are to be issued, that is rupees 2 lakh. So 2 lakh rupees shares were issued as a bonus. Initially, equity share capital was of 10 lakh, that was given a summation of 2 lakh. So, the closing balance of your equity share capital was 12 lakh, right? So, that means there is a change of only 2 lakh, which was because of issue of bonus shares. On another hand, security premiums opening balance, which was of rupees 5 lakh, shown a deduction of 2 lakh. 2 lakh was the amount of your bonus shares, right? So there was closing balance of your security premium, that is with rupees 3 lakh. What it shows? It shows that the value of the bonus share which was taken out of your reserve and given a addition to your equity share capital was equal. So we have only capitalized our profits, our reserves for the issue of bonus share. No money came into the business, no money went out of the business, so there is no inflow, no outflow because of issue of bonus share. So here you learned a new point, that this issue of bonus share will not be shown anywhere in your cash flow statement, because there was no inflow of the cash and no outflow of the cash. Only reserves were utilized to issue equity share capital. If we have to pass the journal entry over here, it is not in your syllabus, but if you want to know about this, this is just what we have done. Security premium have been used to issue your equity share capital. Because security premium is used, so it is debited to reduce its balance, and equity share capital was added, so it is credited, right? So there is no money coming into the business, no money going out of the business, so that's why this pointer is not to be recorded in your cash flow statement. Let's go to the next point. Now, next in the question, it was to talk about the profits for Smart Pay in the year was after all appropriations were of rupees 7,50,000, and what were the appropriations that are given to you. So here these profits are earned during the year. Interim dividend paid during the year is the first point. What you gonna do in the operating activity, this 90,000 would be added for interim dividend, and this would be given a deduction where in your financing activities, right? Then depreciation on machinery. Depreciation on machinery would also be added to your operating activities, right? For the calculation of your net cash flow from operating activities. But where it would be taken next to that, it would be taken to your machinery account. Second adjustment, that it would be taken to your machinery account on the credit side of the account. Then there is loss of machinery due to the fire, right? Now, what about loss of machinery due to the fire? This is your extraordinary item. This is not as per your business operating activities. So, first of all, this would be added in your operating activities because this is an extraordinary item. Second, this loss of machinery would also be taken to which account? That is your machinery account credit side, to make a calculation of purchase of machinery, right? So when we will be preparing machinery account, this depreciation and this loss both will go to your credit side of the machinery account. Then there is a point about insurance claim received on loss of machinery due to fire. This is also an extraordinary item. When we talk about the operating profits, we say we have to calculate net profit before your extraordinary items. For that purpose, this is again an extraordinary item. This is insurance claim received, right? Insurance claim is received, which is an extraordinary item, so it would be given a less in your operating activities, and it will be given an add. This would be added where? In your investing activities. Why added in your investing activities? Because this is due to the machinery is your investment activity, so insurance claim received would be deducted from your operating activities while added in your investing activities. Next is the point of interest on non-current investment received. Interest received is again which kind of activity? Investment activity. So it would be given an addition in your investment activity, but a less in your operating activities, right? Then there is a point of tax refund. Tax refund point we will have to consider only in operating activities. What we have to do this point, firstly, because tax received is inflow, that means it has been added to your profits already, it has been there in addition form. So first of all, we will give a less for this on operating activities, and then from the last point where we write tax paid, from that we will deduct this refund of tax. Two points we have to do for that, both the points we have to do in the operating activities. First of all, tax refund would be deducted from your net profit in operating activities, then it would be deducted from the point of your tax paid in operating activities, last point. So what we have discussed now we are going to place same in your cash flow from operating activities. We are going to do these all points in your operating activities. Let's see. Okay guys, here is my cash flow from operating activities. Now let's see. First of all, I was given net profit earned during the year. We took that net profit earned during the year was 7,50,000. Then the question was about, there I was given a point of interim dividend, right? Interim dividend we have to add up over here with the value of rupees 90,000. So in the question, it was given with the 90,000 interim dividend we took in your operating activity by the way of addition. Now this will be subtracted where in your financing activity, right? So let's see, under the head financing activity, interim dividend is given a deduction with rupees 90,000. The next point we had in the question was about your loss on machinery due to fire. Now loss on machinery or asset due to fire was given 20,000 rupees. So this loss on issue of asset due to fire is your extraordinary item. This loss on asset due to fire is added in the net profit for the calculation of net profit before tax and extraordinary items. Remind you, the loss on sale is taken under the head non-cash non-operating expenses, but loss on asset due to fire, due to earthquake will be considered before your extraordinary items calculation, right? So it is taken here. Now where it is to be taken for your second part, it will go to your asset account, your machinery account. There I'll show that loss on asset is taken on the credit side of your machinery account with rupees 20,000. Side by side we are preparing our machinery account. The loss is shown on the credit because it is your loss, so machinery is lost, that's why it is credited in the machinery account with rupees 20,000, right? Then the next point was in the question, that was about the depreciation on machinery. Now depreciation on machinery will go under which head? Non-operating and non-cash expenses. That was of 40,000. So depreciation is non-cash expense, so we have to add this over here. And in the machinery account, this 40,000 depreciation, like the loss, will go on the credit side because the machinery has reduced due to depreciation and due to loss, right? So this is the less side of your machinery account, so both are on the credit side. Next point in the question was about insurance claim received. So insurance claim received itself shows that when it was received, it was added to your profits. Now it is to be deducted because we have to consider this insurance claim on the loss of asset due to fire. So this will also come before extraordinary items. To remind you, these points carry your marks for the marking scheme. If you put this point down over here, then the marks would be given a deduction for this point treatment, right? So this have to go before extraordinary items. Now insurance claim received given a deduction before extraordinary items net profit, and it would be added where? It would be added in your investing activities. So here we have written insurance claim received with rupees 10,000 in your investing activities. The next point in the question was about tax refund. Now tax refund you have to deduct, this is also to be deducted, so that's why it is in bracket. Now this is to be deducted before tax and extraordinary items, this have to come here, right? After that this tax refund will go operating activities last point where you will take your tax paid. Now how to take tax paid, at that I'll tell you afterwards, but refund is to be deducted from your tax paid value, right? So here till this particular case, one point is left. Sorry, there is interest on non-current investments, which was also given there. Now, interest on non-current investments. This point is your belonging to which activity? Investment activity. So this would be added in investment and deducted from operating. So we have given a deduction in operating activity, and under the head your investing activities, interest on investment is given an addition with rupees 30,000. Now we are coming back to our question. Let's consider further more points what we have in the question. There was general reserve with the no change, 1,50,000, 1,50,000, no change. Investment in the marketable securities and cash in hand, both are added for the calculation of your cash and cash equivalents, right? So this closing balance of cash and cash equivalent would be 1,50,000 plus 2 lakh, 3,50,000, and opening balance of cash and cash equivalents would be 1 lakh plus 3 lakh, that is 4 lakh. So opening balance of cash and cash equivalent 4 lakh, and closing balance of cash and cash equivalent would be 3 lakh. Next we have machinery opening balances of 2 lakh and closing balances of 3 lakh. So let's prepare machinery account from here. In the machinery account, we have balance brought down 2 lakh and the balance carried down of 3 lakh. We have already put over here the values for your depreciation and for the loss on the asset due to fire. So now when we add up this account, your credit side is more than debit side. So that total of 3 lakh 60 when deducted with the value of 2 lakh gives a difference on the debit side of the account, which shows a plus value. That means we have purchased a machinery here, machinery account debit to bank account with 1,60,000 rupees. This purchase of machinery will be taken in your investing activities by the way of purchase for a less value. So let's see in the investing activities what we have taken over here. Purchase of machine with rupees 1,60,000 as a negative value here under the bracket. Now going back to your machinery account, I have already told in the last videos, balance brought down is not to be taken, balance carried down is not to be taken, loss have already been taken in P&L, depreciation had also been taken in P&L, and now purchase is also shown in your investing activities. So machinery account is done. We don't need any more machinery account. Now going back to our question, the next point is of non-current investments. Non-current investments were of 3 lakh, now is 4 lakh, that it shows there is a purchase of 1 lakh non-current investments which will go to the investing activities as a less balance. So under investing activities, we had purchase of non-current investment with rupees 1 lakh as a less balance shown by the bracket over here. Okay, so this point is clear. Now the next point in the question is of bank overdraft. The bank overdraft was 2 lakh and now it is of 2,50,000. It shows 50,000 is the raising of funds from your bank overdraft. So this will go to which activities? Financing activities. So under the head financing activities, we have proceeds from bank overdraft 50,000 as a plus balance because it is inflow of your cash into the business. Okay, going along. There is a point of goodwill now. The goodwill which was of 80,000 now is of 30,000, and there is one more point in the adjustment. Goodwill purchased during the year is of 20,000. So I will have to prepare which account now? Goodwill account. So let's see. Here is the goodwill account. Goodwill account opening balance was of 80,000 and closing balance given in the question was of 30,000. As per the question, there was one adjustment that goodwill purchased. Purchase means goodwill account debit to bank account, that was of 20,000 value. Now total is 1 lakh minus this 30,000. There is 70,000 difference on the credit side of the goodwill account. It shows that goodwill got reduced with the value of rupees 70,000. Where we will get it reduced? It will be from your profit and loss account, that is your balancing figure. Now we have to use these 2 points in your cash flow statement. First of all, goodwill purchase was given, that was of 20,000. So it will go to which activity? That is your investing activity with the less value. So see, we have shown goodwill purchase 20,000 as a less value here. Now, the second point is of your profit and loss, that is goodwill written off during the year is 70,000. It is non-cash expense, so it will be added back in your operating activities. Depreciation of goodwill written is off with 70,000 added back in your calculation of operating profits, right? Now, the last point over here given in the question is about provision for tax. Now, the question is silent all over here. Whatever provision for tax was charged from the PNL or what was paid, right? So, what I have told you in the earlier videos, that last year balance you will consider as paid value. This would be considered as your paid value, and this would be considered as your made value means we will treat it as that this is the provision for tax made during the year, which would be added to your net profit before extraordinary items and tax, and this would be the paid value, that is the last point in your operating activities. So 80,000 we have to add. So let's see, in your operating activities we have added up our provision for tax made during the year with 80,000 add up here. Now, the provision for tax paid, we have taken a value of rupees 60,000 last year value, less refund we will take how much value here, that is 40,000. Paid minus refund if it is there in the question, otherwise this value will go for the deduction. And the last point is proposed dividend. Proposed dividend are given for the 2 years, but we will consider it for the last year, right? The last year proposed dividend is of rupees 1,60,000, not of the current year. We will not consider it. So 1,60,000 proposed dividend will be added in your operating activities and deducted from your financing activities. So see over here, proposed dividend 1,60,000 added in your calculation of net profit before tax and extraordinary item, and this proposed dividend is given a deduction in your financing activities with rupees 1,60,000 here, right? So this is with the bracket here, right? So now, as per the question, it was to ask us about few cases, right? So first of all, net profit before tax and extraordinary items. So for the net profit before tax and extraordinary item, we took net profit earned during the year, loss on asset plus proposed dividend plus interim dividend plus provision for tax made during the year plus insurance claim received less and tax refund also less. So what is the net profit before tax and extraordinary item? That value is 10 lakh and 70,000. This is the answer of my first part. The second part asks us about operating profit before working capital changes. Now, operating profit before working capital changes will add up to your net profit before tax and extraordinary item, non-operating non-cash expense, and less non-operating and non-cash income. So when we did that, our second answer was 11 lakh and 50,000 for your calculation of operating profit before working capital changes. In the question, there were no working capital changes were given, so we could not calculate actually cash flow from our operating activities. We have to stop here. Then the third point is to ask in about cash flow from your investing activities. We have done all these points. So when we calculated the value here, it was in negative. So cash flow is not positive, rather cash is used in your investing activities. Then the fourth point is about cash flow from financing activity. To calculate cash flow from financing activity, we have done all these points. Again, there is a negative value, so there is net cash used in financing activity with rupees 2 lakh. This is the fourth part answer. Lastly, question asks me about closing balance of your cash and cash equivalents. That I've already told you that cash in hand plus investment in marketable securities gives you a balance of 3,50,000. So here is how we have answered our 5 parts of the given question. Thank you. I hope you understand the question. If any query is there, kindly post in the video after the video. Thank you. Accountitude, keep scoring, like, share and subscribe to my channel.